Thank you for allowing us to come in this morning. Going to be joining us here in just a few moments via Zoom there. One of our groups that help us manage some of the funds for the county pension. They're with Madison Investments. They have a piece that's in fixed income, and then they also have a piece that's in what we call mid-cap or medium-sized companies. So they're going to speak for a couple minutes after our comments here with our update on our report, if that's all right. So the report, normal report that we go through, if you turn to page 4 of 11 in the bottom right-hand corner. And this report is for the period of October 1st to December 31st, so the fourth quarter of the year. And up in the top left-hand side, where it says under relationship overview for periods of time, the current period, which is that quarter, we started off the quarter with the pension at $118,096,940, and then during the quarter, there was $2.7 million of withdrawals on that, and then there was appreciation of $8,069,269, and then the ending year value of $123,458,157. And then if you move 2 columns to the right of that, at the top, you'll notice it says year to date, so the full year for last year, for calendar year 2022. We started the year off at $153 million, and then with withdrawals underneath that of about $8.5 million. And then we had a loss of $21,601,184 there. And then the final balance, or ending balance again at that $123 million number that we had. So our returns there at the bottom, you can see for the quarter, we were up 6.85% for the quarter. And then for the year, you can see underneath there, we were down 14.15% for the year. Just to kind of give a little perspective, sometimes we'll talk about kind of how overall markets did during that time. The bond market was down about 13% during that time. The stock market, comparable stock market, was down about 18% during that time. And then the closest comparison for what the way that the county is invested, the way that the pension is invested, that index was down a little over 16%. So we did have a difficult year. We talked about that a little bit at the last meeting, and I believe the fellows today are going to talk some more about that too, kind of what contributed to that. Any questions on that part at all? Bottom right-hand corner, just real briefly again, is just the overall allocation. So it kind of shows 4 main categories. The cash and equivalents, they show at 0. We're not really holding any cash right now in the portfolio. Moving around clockwise, the equities or the stocks are about 64%. Fixed income or the bonds are 29%. And then alternative investments, which are the REIT portfolio, is about 6% currently at the end of the year here. And then I'm going to have you go to page 6, if you would, please. Again, bottom right-hand corner, 6 of 11. And this is important because this has your long-term numbers listed in it. And if you see about a third of the way over, you see the 1-year, 3-year, 5-year, and 10-year period kind of across the top. And if you go to the bottom line, it shows, as I just mentioned, last year was negative 14%. And then there's the 3-year number after that. So for the last 3 years, the pension has averaged 2.79%, and that's per year. So even with the poor year that we had last year, that's been the average of 2.79%. The 5-year number of 4.76, and then the 10-year number of 6.53, and that's per year. So we have obviously up years, we have down years, and that's been the average over the last 10 years. With that, Mike has updated numbers, and then we can introduce the
assumption 7.25?
7.25, I believe.
Yeah.
Is that 7.25? Yeah. So obviously, the past year kind of has affected those the 3, 5, and 10-year numbers. So if we can get things back on track, that 10-year number will bounce. Could bounce anyway. So we'll have to wait and see what happens. But any questions on what Brett shared with you at all?
I don't. Robert?
So I guess I get to share a little bit of better news in that we are off to a much better start this year. Through yesterday, we're up about 5.35%. Of course, that's an unaudited number, but that's what I have So that brings our balance as through yesterday of $128,833,605. And again, that's in line with, again, as Brett alluded to, some of the indexes. That's right now, we're right in line with what the market's providing. So that looks pretty favorable. And our allocation is still the same, so we're still within our guidelines, our targets, within the investment policy that the board here has approved in the past. And we don't feel like there's any need to make any changes right now. The portfolio is constructed in such a way that it's somewhat defensive, which is, I think, good. I think that's what helped us last year, frankly, to get some better performance than the indexes. And everything that we've done, it's always been with the best of quality in mind. Every manager that we utilize. And we always hear quality, everybody wants good quality, but I think our managers walk the walk in that they really look at the fundamentals and balance sheets, low debt on the companies that they're invested in as far as the equities are concerned. So just keep that in mind. It's built that way overall.
So for the long.
Right.
So we'll just take a minute and kind of introduce the folks that are online. So I mentioned Madison Investment. So we have